B3, report regarding Moody's Investors Service upgrade of rating A2 from A3 for the McAllen ISD general obligations unlimited tax bonds. Dr. Gonzalez.
Yes, sir. McAllen ISD's strong fiscal management practices over the past 5 years have contributed to Moody's Investors Services upgrade of credit rating for our district. Mr. Dusty Taylor with RBC Capital Markets will walk us through the report, and this item is for information only. Welcome, sir.
Good evening.
Good evening.
Again, for the record, my name is Dusty Traylor. I'm a managing director with RBC Capital Markets. We've had the honor and privilege of serving the district as financial advisor for a number of years. Good to see you guys this evening. And I'm excited to bring good news this evening. The report before you is for the Moody's Investor Service rating review, in which Ms. Garcia and Ms. Richards just recently participated in and worked to conduct a conference call with the analysts from Moody's Investor Service in Dallas. Sure. And at the end of that review period by Moody's, they have upgraded their rating on the district's outstanding bonds from AA3 to AA2. So this page in the presentation that's before you just kind of shows you where the district's bond ratings currently sit. So you moved up one notch with your Moody's rating into the high grade, high quality, or to the middle of the high grade, high quality category by Moody's. You're only one notch separates you guys from a full AAA. This is very, very good news, and what it signifies is that the financial practices that the district is putting into place are being recognized by the bond community and by investors in bonds. So it means that the district is becoming even more credit worthy. You guys have seen a number of bond rating increases over the past 10 years, and this is just another positive step in that direction. In their report, Moody's noted a couple of things as it relates to credit strengths. One, your ample tax base that benefits from your cross-border trade with Mexico, strong fiscal management resulting in operating surpluses and healthy financial reserves. And I want to touch on that for a minute. You guys have done a tremendous job of managing fund balance and increasing that fund balance over the past several years, and that's part of what led to this upgrade by Moody's. Another credit strength they deem is a low debt burden with a rapid average principal amortization. You're paying off large pieces of your bonds each and every year as we move forward. And then things that they deem to be credit challenges, weak wealth and income metrics. So that's looking at effective buying income of folks that live in the district, or median household income of folks that live in the district. Those are items that are not necessarily in control of the district, but that is part of their rating metric. And then another credit challenge, just some declines in enrollment that we've seen, or that they've seen over the past couple of years. So they deem that to be somewhat of a credit challenge. I don't know if I put the other page in this report. The other thing I wanted to just talk about is how this now makes you compare to some of your peers here locally. And so I put together a page on that. Your AA2 rating ranks you higher than Sharyland, Mission, Edinburgh, PSJA, Valley View. I don't know of any of the school districts here locally that carry a higher bond rating than the AA2 by Moody. So this puts you in very, very good company.
Could you say that real slow? Real slow and loud.
Let me see if I can say
Please
it a little
say it
slower.
real slow.
They're typing big.
I don't know of another district that carries a higher rating in the Valley for bonds than you guys with the AA2. So this puts you in very good stead. And it's kudos to this board, and it's kudos to the administration for a job well done. So I appreciate the opportunity to come down and give the report. I think I may have had the easiest job of the night.
Thank you for your presentation. Any questions, comments from the board? Trustee Vela.
Thank you. Mr. Traynor, thank you for coming down and giving us the good news.
Thank you. Happy to be here.
Moody's is just one of the rating agencies that are out there.
Yes, sir.
There are others, obviously. Is their trend will their trend follow this same type of upgrade, if you will? And what could trigger that upgrade? Is there anything we can do, or is it just something that happens?
Sure. The other two prominent rating services that are out there are Standard & Poor's and Fitch. You guys have also a rating with Standard & Poor's. Currently, that Standard & Poor's rating is at the AA- level. That's one notch now below this Moody's level. And periodically, they too will do reviews of your credit. They kind of, as part of the the financial reforms that we've seen following the subprime fallout, the rating agencies have become more consistent in reviewing the bonds for which they hold a rating. And they will periodically review those credits just like Moody's did here. They should do that at least once a year, if not once a year, then once every 18 months. And so it's sometime here in the next year, we're going to visit with S&P. And the things that contributed to the increase by Moody's are things that should give upward pressure to the S&P rating. Now, each and every one of these rating agencies have somewhat different metrics for how they look at the ratings. So it's definitely not a sure thing that S&P would increase the rating. But I think what we're seeing here is if you guys continue with the strong financial management that you guys have seen, there, in my opinion, there should be upward pressure on the S&P rating as well.
Thank you.
Thank you, Trustee John. Trustee Suarez.
Mr. Traylor, thank you for coming and give us this good news. Obviously, next time you come, we want probably the best news. And I think you talked about it, but highlighting it, but just to reiterate what you said, for us to get to the AAA rating, besides enrollment, what other factors could we do different to get there?
From the AA to the AAA rating, there's one more rating that lies between you, and that's the AA1. That's the next goal that we would like to see you hit, and that would be, I think, stabilized and growing enrollment, and then continued fund balance increases. Those are the sorts of things that might contribute to the increase to the AA1 level. But one thing to remember as it relates to these bond ratings, each and every one of these rating agencies, they look at a number of quantitative factors. Some of those are factors that are things that you guys can control, fund balance and reserves and things like that. Other factors are things that you cannot control, and that has to do with the unemployment rate of the area, the median household income of the area, the tax base itself of the area, those sorts of things. So there are some things that you guys can absolutely affect, but there are other things that your actions could not necessarily directly impact on the rating. So, but continue doing the things that you're doing should help our chances to get to the AA1. There are only very, very few districts, and there are one or two districts in the state that have that AAA rating. You know, like Highland Park ISD up in Dallas is one that comes to mind. So there's very few that get to that.
Thank you.
Thank you, Trustee Suarez. Any other questions, comments?
Mr.
Doctor?
President, if I may.
Yes, sir.
I do want to take this opportunity to thank previous administrations for setting a solid foundation and really setting the trail for us, and also previous boards for being good stewards of public monies, along with this outstanding board that has continued being very laser focused on being very, very responsible with the public's monies. And also special thank you to our Assistant Superintendent, Lorena Garcia. Thank you for your leadership. Also, Ms. Cindy Richards, our Chief Financial Officer, and the entire money team. We appreciate you all very, very much. But most of all, thank you to the board, because it's the vision of this board that continues us on this track.
I would add one thing. Every time that I'm on a call with Ms. Garcia or Ms. Richards in this sort of realm, the rating agency realm, or anything to do with your bonds and the finances that we deal with the district, I'm always amazed at their attention to detail as it relates to McAllen ISD. So we have an opportunity to do this for districts all across the state. And I will just tell you that their professionalism with which they handle this business is unmatched.
All right.
Thank you, Mr. Taylor. Any other questions? Trustee Ball.
I just want to add some comments and follow up on what Dr. Gonzalez said, particularly given this is my last meeting, my last full meeting. I'm absolutely thrilled at this news, and the reason that I'm so happy about it is that for the 4 years I've been on this board, I have heard at various times from various elections, from various people, that this board is either not fiscally sound, that we are not fiscally responsible. There usually seems to be something that comes out. Somebody will say during a campaign that we haven't been good stewards of that money. And you coming in here and talking about our credit rating tells me, number one, that any of those statements, any of those assertions, they're completely false. Because we, through Ms. Garcia and her staff, who, as you said, have such incredible attention to detail, are constantly recognized by the state as being fiscally sound, fiscally responsible, good stewards of taxpayer money. So not only is the state of Texas saying that we are fiscally sound, fiscally responsible, but now the private equity industry, the private financial industry is saying that as well. So I want to say that so that we can really put that out there for people that are watching or listening, that previous boards, previous administrations, all the way up through this current board, we are financially responsible and financially sound, and we do an excellent job with the taxpayer money for the city of McAllen. And now we have proof not only from the state of Texas, but from the private sector as well. Ms. Garcia, you are absolutely leading us in that, and you have done a very fine job taking the reins over from the previous leader. So thank you so much for that.
Thank you, Trustee Ball. Well said.
Just one quick question.
Trustee Alvarado.
How long do we keep this rating, or is there, how does that work?
Sure. They will review the rating every 12 to 18 months. So they'll come back and look again.
Okay, thank you.
One more, if I may.
Yes, sir. Trustee Vella.
In a practical sense, it means that if there's a bond purchaser out there, they would look at our bonds first because of the integrity of the bond, and they're safer in buying our bond. Or if we go out to refinance our bonds, we may get a better interest rate, on refinancing in those bonds. So it's all good. It's like if you purchased in a home and your credit score is good.
It is identical to your my credit score.
Yeah.
So if we go to the bank to get a loan personally, we want as high a credit score as we can get so that we can get as low of an interest rate as possible. And that's the way this works in the bond.
Yeah, that's what this means for our school district, is that our credit score is actually as high as you can possibly get.
Getting there. Yes, sir.
Thank you.
Thank you, Trustee Vella. Any other questions or comments from the board? I do have one side question, and it may not be directly tied, but it may, in some consideration. If the district were so to choose to go out for a loan instead of going for bonds, how would this score affect that, or if it does at all?
Yes, sir. It's the same thing. The investors that would be looking at a bond would also be looking at the bond rating of the district as well, and so it's helpful in that regard as well to help potentially bring the interest rates down.
All right, thank you. Any other questions or comments from the board? Excellent. Appreciate the report and your time and your consideration here today, Mr. Taylor. Thank you. Safe travels.
Thank you. Good to see y'all.